Okay, the first step for using the Kansas Rate Checkup tool online is going to the website to either sign in or register. The website is kansasratecheckup.org, and it'll pull up this home screen. Once you get here, your first step will be to register an organization if your organization is not already registered. You can identify your organization type as either a city, rural water district, or other. You can type in the address for your organization. Make sure you get address, county, city, and state. So we'll do Cedric, zip code. Make sure you fill in your first and last name. Middle name is not required. We'll need an email address, a phone number, and then a job title. Once you have all those items filled in, you'll click on submit. Once your information is submitted, an email will come to me for confirmation to approve your organization request. Once that's approved, you'll get an automated email that will have your username and a temporary password to be able to use to complete your initial sign-in. Once you have that, you can go to your sign-in section either from the toolbar at the top on the very right, or if you go back to the home screen, you can click on the orange sign-in button. Once there, you'll fill in the user ID you were provided in your email confirmation, as well as the temporary password you were provided. Once you submit, that will get you to your main homepage for the organization that's set up. From here, you can edit your profile or your organization. The original person that sets up the organization will be designated a organization admin. Under the organization profile, you have the information that you entered on that original submittal form. So it's got your organization name, address, all your details. You can edit either of those under the profile tab. You can go to your edit sign-in, plug in your temporary password, and update to a new permanent if this is the first time you're logging in. To begin working on a brand new rate checkup, you'll start on your home page for your organization. You'll need to select the organization you're with. In this case, since I have super admin capabilities, every organization registered is listed under my list, but you'll just have the one that you're specifically registered to. Once you've selected that, any reviews you start working on or have in process will show up underneath your table. It'll have titles, descriptions, what date it was created on, who it was created by, whether it's in progress or completed. If you want to view or edit any one of those, and then you have the lock icons off to the right. If you have a green lock, like right there, it means it's locked by you specifically. An orange lock icon means it's been locked by someone else in your organization. If there is no lock icon, it means that file is unlocked and anyone can go in and view or edit that file. Once you click on Start a New Rate Checkup, it'll ask for a few details to complete the initial setup. So you'll enter a basic title for the rate checkup file, a brief description, and then you can select what type of financial statements you're going to be using to complete your historical information, whether they are audited or unaudited or some other internal report. Most entities use audited. Whichever one you select, it doesn't necessarily matter. It won't change the program in any way or result in any differences. It's just informational to know what type of information was used for the review. The next two questions we use to establish the historical period of the review. So you'll need to define the most recent year of financial statements you have available. So we'll go with 2019. For the next one, you'll enter the most recent year you have a water usage report available. We'll do 2020. Once you've entered all that information, you'll click on next. You'll have a pop-up verification message just confirming that the information you entered was correct. And if you want to proceed, you can click on yes. And then you come to your main input summary page for the overall review. Now here you can see the 2 years we entered in the prior section were used to establish your 3-year historical period of 2019, 18, and 17. Right now we've got red X's for each section for each year because that information needs to be defined and completed. The top part here is the information you entered in the previous screen and at this point cannot be changed. At the bottom, you have the 3 main sections you're going to be working through, and we'll need to complete all 3 years of information. So the first section we're going to work through is going to be the rate structure section. If you haven't completed any prior reviews, your first and only step is going to be to add a new rate structure. For the rate structure section, there's 2 subgroups we'll move through, the effective period and the customer group information. For the effective period, the first time running through this section, the current rate structure is going to be what's selected and what needs to be defined first. So this is going to be the rate structure that was in effect as of the end of your most recent historical year, in this case 2019. So you'll define the effective period based on when that rate structure initially went into effect and was adopted. In this case, we have, in the scenario I'm going to be entering, we have changes that took place each year. So this first one is going to be January 1 of 2019. For the current rate structure, you don't have to enter an end date, but that option is available. Once you enter the start date, you'll click Save and Next, and you'll enter the section to be able to define and enter your customer groups and charges for those. So first you'll need to define if your rate structure and customer groups are billed based on per gallons or per cubic feet. Next, you'll need to enter the total number of customer groups that are defined within your rate structure. This could be as simple as everyone being charged the same thing, and so you only have one group, but you could have inside versus outside users. If you bill based on different meter sizes, inside versus out, you'll need to consider each one of those a customer group. If you're dealing with wholesalers, you usually want to treat each one of those as their own separate group. So for the example I'm going to be entering, there will be 2 customer groups. Below the table, to start entering those groups, you'll click on Add a New Customer Group. You'll define what type of customer that is. In this case, we'll do non-wholesale first. Enter a customer group for that. You can select if there are any large customers in this group. No. Then next you work through the charges for that group. So first is dealing with the monthly minimum, if there is one or not. In this case, there is. Then defining if there's any usage included within that monthly minimum charge. So you can either select no usage included if no gallons are included within the monthly minimum. Or if you have a flat monthly minimum and all usage is included in that, you can select it. Anything outside of those, you'll want to select other. In this case, there are 2,000 gallons included within the monthly minimum. So you can type that in and that populates into your step charge table to be able to start entering your step charges. You'll need to define the number of steps you have. The monthly minimum itself does not count as a step. So these are just per 1,000 gallons charges or per 100 cubic feet charges over and above what's already included in the monthly minimum. So the from column for gallons included in the step you're defining will flow either from the monthly minimum section, or if we're dealing with the second step charge, it'll flow from what's defined in the to column. So in this case, the step one for the example we're doing, their step one goes from 2,001 gallons up to 5,000 gallons. Water included will auto calculate saying there's 3,000 gallons included within that step. And the charge for that is $7.30, and that's per 1,000 gallons. We'll need to add a second step that covers 5,000 up to 10,000. 610. And then whatever your last step is, you want to make sure your to column ends with and over to make sure it covers all usage over and above what was previously accounted for in your earlier steps. So that last step will be everything above 5,000. Now you can click on save. The main thing to keep in mind here is that an error message will appear if the number of steps defined within the table does not match the number of steps entered in the above question. So you'll want to make sure those numbers match. If not, you'll get an error message. But if it does, you'll click on save, and that customer group, as you can see, was recorded as being saved successfully. Since we defined two customer groups here, we'll need to add another one. In this case, it's a wholesale user. Here we have the same information we're trying to gather. It's just a little different. So here we're trying to take into account if the wholesaler has a minimum purchase requirement. So that's saying, are they required to purchase a certain amount or pay for a minimum amount of gallons every month, whether they use those gallons or not? In this case, they don't have that. They don't have a specific monthly minimum. They are only billed based on usage. So from 0 and over, they are billed $263 per 1,000. There's no additional steps. They're just charged that one. Our number of total steps match. In this case, a limiting cap provision. A limiting cap would be a case if for your wholesaler, if you're limited either based on the amount you can increase their rates in any given year, by a percentage. So this would be, say you can't increase rates more than 3% to that user a year, you could define that within here. That gets them added as a customer group. Now we have two groups defined. We said under the rate structure there were only two groups, so we'll be able to save and next. And that completes the rate structure section from January 1, 2019 to present. With that completion, you can see the Red X for the rate structure section for 2019 has turned to a green check mark, signifying that that specific year and information has been fully completed. We'll need to do 2 more entries to complete the rate structure section for 2018 and 2017. Note that if your rate structure was in effect and there were no changes to any one of those 3 years, your initial effective period or effective date, if it covers all 3 of those will turn to check marks. So you would only need to enter the 1. In this case, we need to enter 2 more due to changes. So here in the effective period, you can see it shifted from, this is no longer a current rate structure, this is a prior historical one. And we'll have to enter the start date for each one of these. So this one was effective January 1, 2018, ended December 31st of 2018, since our current rate structure went into effect January 1 of 2019. The information entered should be the same for the most part. So we've got still billing based on gallons. 2 customer groups we'll need to define. Here you should be able to just select some of the defined terms that were previously entered. That we'll add the second customer group, which was the wholesaler. Save and next. That completes the rate structure section for 2018. Again, the red X has changed to a green check mark showing it's been completed. Now we'll need to add another one to cover that 3rd historical year. Next, add the second group. Save and next, completed. That completes the rate structure section for 2017. Now we have all 3 historical years for the rate structure section completed. Comments have updated to all information has been provided for that section. So we can move on to the next main section dealing with water usage reports and entry. So here again, we'll click add. Can select the year for which the report we're entering information on. You can select either to enter the information on a monthly basis or annual. So if you select yes, a table similar to the Annual water usage report that gets submitted to the state will populate, where you can enter the information by month. Typically, I keep things simpler, and you can just enter that information on an annual basis. So first row is going to be total gallons produced and or purchased. In this case, for the example, they do not produce their own water, they purchase everything. So, total gallons sold gets entered next. Any gallons accounted for or flushed can then be entered. And then unaccounted for water loss can be entered after that. Lastly, you'll want to enter your number of total active water service connections. Your number of active water service connections will flow to the next page. Here, you need to be able to break that number down based on your actual defined customer groups from your rate structure. This may require additional internal reports to be able to complete. Once you have those, you can then enter that information as provided. And the sum of the figures in the table will need to match the total number of active connections entered from the prior section. If these two values don't match, you'll get an error message saying something needs to be corrected or rechecked until those values do come up correct. Some issues we find is from the prior section, the total active connections defined is a year-end figure, and typically for the breakdown, we look at the average number of customers within that group throughout the year, instead of the amount at any specific time of the year, whether that's the number of customers at the beginning of the year or at the end. Sometimes that can be accounted for if you've included customers in your original count that were provided water for free. You can use this section here to try and adjust for that. In this case, our two values match, so we don't need to account for that. Here are your figures for numbers 1, 2, 3, 5, and 6 flow from the original annual summary section we completed. The two tables will be used to define where water is purchased if you're dealing with an entity that purchases water. So here we'll add a seller of who they buy water from. And all their gallons were purchased from one entity. So total water purchased from all sellers, again, should match total water purchased from the original annual summary section. If those values don't match, something needs to go back and be checked or reworked. Either your annual summary needs to be modified to match what your breakdown is, or your breakdown needs to be revised to match what your total water purchased originally reported was. The second table is used to provide a breakdown of the total gallons sold. So again, just like with your number of customers, you need to be able to break down your total gallons sold based on your actual defined customer groups under your rate structure. Internal reports might be needed to be able to complete this. In this case, we have total values broken down, match total gallons sold. So in this case, we'll be able to proceed. And that completes the water usage report for 2019. Just like in the rate structure section, as you complete each water usage report, each one of your years in your input summary will convert from the red X to the green check mark, showing that year has been fully completed. I'll go through that same process of breaking down your total active connections based on customer group. Define customer groups. And then breaking down total water purchased to your defined sellers. And total gallons sold based on customer group. And this is an example where I typed it in wrong. For 2018, you have the added feature of being able to copy existing data to partially complete the table. So the seller name will autofill, and you'll just have to update the actual gallons purchased that year to match. Completes the report for 2018. We'll need to complete that section one more time for the 3-year period. So we'll complete it for 2017. And that completes the entry of the water usage report for the 3-year period. The last section we're going to be moving through is going to be for the financial statements. So here we'll need to add, again, information for each of the 3 years we're reporting on. So first financial period is going to be for 2019. For the financial statements, you have 5 subsections you'll be working through. You'll defining the period, cash receipts, expenditures, cash balances, and outstanding debt. 2019 dates are already populated, so you can just save in next. For the cash receipts, for line number 1, what you'll need to do is, if your financial statements don't already have total cash receipts defined and totaled up above, this would mainly be if you have non-operating revenues separated out into a different section. You'll need to make sure you grab those figures to put a total amount for cash receipts up here to make sure you're grabbing all of those. So in this case, charges from the sale of water is already a defined term, since everyone dealing with the water utility will have charges from the sale of water. Enter annual receipts from that. And then you can add a cash receipt. You'll want to add a cash receipt line item for each additional line item you have. So that can be manually defined. We have a few items that will auto-populate that you can select from. Otherwise, all of those can be user defined to match your financial statements, line items in your financial statements, exactly how they're defined there. You can, each additional line item for cash receipts, you'll want to define the type of revenues those are, if they're operating or non-operating. And then define if they need to be included for a debt service coverage ratio calculation. Typically, any operating revenue will not be selected. Non-operating revenue, especially one-time revenues coming in. Examples would be reimbursements, insurance reimbursements, or maybe receiving grant or loan funds. Those are non-operating revenues and are not expected to continue, and you definitely don't want to be relying on those sources for future revenues. So anything like that, you would select the classification for the debt service coverage ratio, but operating, that will stay unchecked. Now that our total cash receipts defined within the table match our total cash receipts for the fiscal year we're looking at, we can save and move forward. If those two values do not match, you'll need to take another look back at your financial statements and either revise your total cash receipts available or add new line items that were originally missed until those values match. For the expenditure section, it's the same overall layout. You need to define your total expenditures, if not already done so in your financial statement. So again, it's keeping in mind and capturing any non-operating expenditures that might be broken out separately, or depreciation that is not included with your regular operating expenses. So you'll define the total. We do have the option for expenses if they are broken down by departments. And by departments, we've seen several entities that will have, say it will be distribution, and then they'll have personal services, contractual services, capital outlay. Then there might be general and administration department, and it's the same 3 expense line items. So we set up the department breakout to be able to account for that. You don't have to use those, but that option is available to have those sections defined. That way you're not duplicating personnel services more than once or contractual services more than once. In this case, we've got 3 expense line items that are pre-populated. Water purchases is the first one. And since the example I'm running through, the entity purchases water from another source, that will be used. So we'll type in total water purchase costs in that first line item. The entity does not have any depreciation expense. And then capital outlay, you want to enter those. For any additional line items, just like in the cash receipt section, you'll want to add an expenditure line item. And again, those several will pre-populate that you can select from, or you can just define those as needed. Just like with cash receipts, you'll need to define the type of that expense line item, whether it's an operating expense or non-operating expense. Designate whether it needs to be classified for the purposes of calculating the debt service coverage ratio. Again, that will never be selected for any operating expenses. That's more for non-operating expenditures or not regular operating expenses. So depreciation and capital outlay have already been designated non-operating and selected for classification for the debt service coverage ratio. A new section for expenses that you didn't see in cash receipts is you can define or allocate what percentage of those expenses are fixed or variable. And there's no rule of thumb here. It's just your best idea of how much of those will always need to be paid, whether you're selling water or not. Now that our total expenditures defined within the table match the total expenditures we've defined above, we know we've entered everything, and so we can move forward to save and next. Cash balances are defined. Here we've got total cash receipts flow through from the cash receipt section, as do total expenditures. Based on that, cash receipts over under expenditures was $7,331. Here you're able to define if you're able to provide an unencumbered cash balance or not. If you don't have an unencumbered cash balance, we have the option to define either cash and cash equivalents provided from your balance sheet. In this case, we do have an unencumbered cash balance. And based on the cash receipts over under expenditures, your ending cash balance should be $15,768. If that value does not match what's recorded in your audit, then that means you're missing some line items or something and need to go back and recheck your cash receipts and total expenditure section until your beginning and ending balances match what's reported in your audit. And that cash receipt over under expenditure should also match as well. Last section we'll move through will be for entering outstanding debt. In this case, since we had on the expense side that transfer to the bond and interest fund, that means there's at least one outstanding bond issue. So we'll need to define that for that fiscal year we're working on. So in 2019, we'll need to add an outstanding obligation. From the table that pops up, you'll be able to select what type of outstanding that issue is. We have some already pre-populated, or you can define an other if the debt you already have does not fall within one of those 5 options. For description, we recommend putting in the series description if you're dealing with a bond issue. For KDHE loans, you could reference the project number as the description. Whatever needs to be defined there to know what specifically that issue and that payment is for. Define the original issue size of that issue. and then whether or not it has a debt service coverage ratio requirement. Now, typically, general obligation bonds, cities that have a KDHE loan or GO bonds through USDA or a capital lease will typically not have any additional coverage requirements. So the coverage will just be 100%. If a city has a utility system revenue bond or rural water districts have any kind of debt, they will typically have a higher coverage ratio. The most often seen is a 125 coverage, but there could also be 110 or 140 under different circumstances. So for that, you'll just need to refer back to your original bond or loan documents to try and confirm any coverage requirement or not. Interest rate defined. For a public bond issue, interest rates typically vary over the life of the issue. We normally recommend just putting in the interest rate for the very last maturity. For KDHE loans, USDA issues, things like that, it's typically one interest rate for the life of the deal. So you can just enter that there. Lastly, you'll enter the final maturity date of that debt. So the program will know how far payments on that issue need to be carried forward for the forecast period. So lastly, you'll enter the total annual payment. Make sure your total annual payment is not just interest paid, but is total principal and interest paid every year. If it is not a flat amount like USDA issues or KDHE loans are, then put in what just the actual payment for that year was for public bond issues. Once that's entered, you'll click save, and that's entered that bond issue or that debt obligation into the table as being outstanding for that year. You can save and next. And that is the last section that completes the financial statements for 2019. We'll need to complete that section 2 more times to complete the 3-year period. So we're working through 2018 information this go around. So we'll work through the same sections, entering total cash receipts for the year we're working with. Here again, we can use a new feature that copies the existing cash receipts, so those will auto-populate. Your type of expense designation and classification defined in 2019 will all carry through. So all you will need to enter will be the amounts of cash receipts that year. In this case, we had 2 additional line items that we did not have in 19, so we'll add 2 new ones. We'll have to define the type again and determine if it needs classified for the debt service coverage ratio. Our total cash receipts matches our total cash receipts entered above. So not missing any line items, we can move forward. Same process for expenditures as last time. Enter total expenditures. We're not breaking items down by department. We can copy the prior line items defined for 2019. And then just enter the expenditure amount for the new year. In this case, we again had a new expenditure line item for this year that was not in 2019. Our total expenditures defined match our total expenditures reported in our audit, so we can move forward. Again, we can define beginning and ending cash balance. So for 2018. And again, we'll use that ending cash balance to confirm and the cash receipts over under expenditures to confirm that no line items were missing from the cash receipts or expenditure section, and all that information was captured. And the outstanding debt, we again had a payment on the same bond issue. So here we'll click yes and add an outstanding debt obligation. In this case, once we select the type and the description, all the other details previously entered will auto-populate. So the only thing that potentially might change would be the total annual payment made that year in the case of a public bond issue. But if you're dealing with a USDA issue like we are here, that annual payment amount won't change. And so there's no additional items that need updated here. And that completes inputs for financial statements for 18. We'll do that one more time for 2017. Our total expenditures defined within the table match our total expenditures from our audit, so we can save and move. There we go. Next, we'll again enter our cash balance, and use that ending cash balance and cash receipts over under expenditures to verify that everything was entered from your financial statements and there's no line items missing. We'll enter the outstanding debt one more time. And again, just like for the prior year, once we select the type and description, all the other details will autofill. Annual payment won't change again in this case, so we can save. And that completes our financial statements for 2017. Now you can see on your input summary page, you have all 3 years of information for all 3 main sections have been converted from the red X's to green check marks, signifying that the sections are completed and fully filled out. And that will allow you to move forward and complete the revenue comparison tab. The revenue comparison tab, what we're doing here is for the 3 years defined, we are taking all the historical information entered between number of customers, rate structures in effect, gallons sold, all those items, and we're trying to recreate or recalculate the revenue reported within the audit. So here you can see the estimated or calculated figure based off information we entered, and then the actual revenue reported within the financial statements. And then you can see how far off each of those figures are. Now we aim to be, as noted above, within plus or minus 5%. That will not always happen. The main thing to keep in mind is seeing how far off your figures are and if they are consistently off by the same amount. So even if they're off 10 or 20%, if they're off that same amount each year, that is a good sign, but it's a sign that something might be missing on the revenue side of things, either an additional charge we're not taking into account, or some other items like that. So before moving forward to the forecast section, it is extremely important to make sure if these values are off, you attempt to fix them. Once you move forward to the forecast section, all the information entered, rate structure, number of customers, sales, all of those items will be locked down and cannot be changed at that point. So if you have any questions on that, don't hesitate to reach out to try and help sort through that or figure out if you need to revise them or not. Once you've made that determination, then you can go forward to the forecast section. The forecast section, we're going to be moving through several subsections. Most correlate to the information we entered on the historical side of things. So the first table is going to be just a basic set of parameters defined. We'll enter annual median household income. You can apply a growth rate to that for estimates, for informational purposes. Baseline year will be auto determined by the program, and that will always just be the year we currently have in progress. You can select how many years you want to forecast out from the baseline year. Standard is 3. But you could go as high as 5 or 10. Growth rate to be applied to expenses, auto-populates at 3%, but you can change that to some other value that you think might be more appropriate. Same thing with cash receipts. You can plug in a growth rate. Normally for cash receipts, we recommend a conservative rate of just leaving those flat, so 0%. Same thing with number of customers, at least to start out, leave that at 0%. And then an additional margin, we normally recommend a flat additional margin of 5%. You could change that either lower or higher. Any items you set here as basic parameters can be changed or revised in the individual sections we're going to be going over. So we'll save those. And your customer data will auto-populate based on some of those parameters we set up. So each section going forward, you'll have the same setup at this point. You'll have the charts that reflect the historical figures entered, and then what we forecasted for those items. In the table below, those items will be broken down based on different groups or categories defined earlier on. So we've got 3 historical figures we review. We've got the actual number of customers and growth rate for 2019 for each of the customer groups defined. We've got the average number of customers or average growth rate for the customer group defined for that 3-year period we entered, and then the median amount of customers and growth rate for that 3-year historical period we're looking at. Now you can take that information and use that to adjust your baseline figures. So here, for the baseline for number of customers, you can scroll over your eye icon and see how that was initially determined. So the base figure is based on the most recent historical year. Mean and median figures, you can use that. So right now we've got base number of customers is 245. That matches number of customers in 2019. The growth rate for that is based on what was entered in the parameter section of remaining flat each year. Now you could override either of those based on the historical figures you've now seen. So if you still want to be slightly conservative, you could increase the growth rate to the 125 to still be slightly conservative. But seeing as there was 2% growth in 19, that may or may not happen. So the overrides are purely based on local knowledge and what you expect to occur at your city or entity, and how you feel the number of customers will change or grow or not. Anytime you override, you will need comments. So here we went slightly less conservative on the growth rate. And you can save. And then now an override table pops up showing the number of customers forecasted based on the override. You can go back and edit that again if you feel that needs to be changed. But once your override, or if you feel your default figures were sufficient, you can click Save and Next and move on to the next section. Now your water demand here is driven by your average usage or average sales per month to your customers. So we've got the same 3 historical figures we're looking at for all the city users. Average monthly usage in 2019. We've got the average monthly usage for the 3-year period we're looking at, and then the median monthly usage for that 3-year period we're looking at. To be conservative here, the base amount is originally established based on the lowest amount between those 3 historical values. So in this case, 2019 was the lowest average usage, so that usage was established as the base. The same formula was used for the wholesale user. If you feel those need to change, again, you can use the override feature. If you think sales are actually going to go higher or continue to decrease. Once you're satisfied with those, you can do Save and Next. Now your water supply section deals with and is based off the items you entered in the water demand section. So if you think your supply needs to be higher, to get that to change, you'll actually need to go back to your water demand section and make changes there. Otherwise, there's nothing really to override here unless there was a case of changing sellers, or if the entity already buys from more than one seller and maybe they're shifting how much they buy from one to another, is really the only thing you can override here. So outside of that, we'll do save and next. The expenditure section is the big one and the driving force behind any necessary proposed rate increase. So we've got the same three historical figures we've been reviewing in all the other sections. We've got actual expenditures from 2019, the average for the 3-year period, and then the median expense amount for the 3-year period we're looking at. We also have growth rates for each of those highlighted. On water purchases, we also highlight the average cost per 1,000 gallons. For each of these, we again set a base like we have in the prior sections to be conservative with expenses. We pick the highest dollar amount between the 3 historical values to set as a base. And then the growth rate of 3% is what was originally set in the parameters. But again, you can review your historical changes for each one of those expenditure line items and override those if you feel necessary. In this case, what we're going to override is dealing with the payments to the bond and interest. In this case, we want to actually zero those out to blank that out, because we will be dealing with the actual annual payments in the next section related to outstanding debt. So we don't want to double count those expenses. So any expense line items related to bond or debt payments need to be zeroed out here in the main expenditure section, because those will be dealt with later. So we'll change that. We'll move on to the next section. So here again, for outstanding debt, since the maturity date on that 2002 bond issue went all the way out to 2042, we have boxes here to be able to plug in the annual payments, since we know those are still outstanding. Again, since that is a USDA issue, the annual payments will just be the same. So we've entered those, we can save and next. Cash receipts. So in the cash receipts section, we've summarized and are dealing with all the cash receipt line items, excluding charges from the sale of water. So as you can see, we only have the additional hookup fee as an operating expense summary and the rural water district reimbursements that were designated non-operating. Again, we can override any one of these like we have the prior sections. So I will override the rural water district reimbursements, since that is not guaranteed revenue. We'll remove that out. Hookup fee is pretty consistent and it's not very significant, so that can stay in. Next, in the cash balance section, as of the end of 19, we have the ending unencumbered cash balance that was provided of 15,768. Now that figure can be updated if it's available, or if there's no updated figure, say we were in the middle of 2020 right now. And so there's no updated ending balance. You can just leave that blank and stick with the 15,000. I'll stick with that in this case. And then there is a section to be able to define and enter other cash funds that might be available. That could be tied to reserve funds specifically dedicated to water utility, or it could be a capital improvement fund that may not necessarily be dedicated strictly to water, but can still be used by the water fund for large capital improvement projects or smaller capital improvement projects. We also highlight the days of operating cash on hand. Normally, we recommend a minimum of 180 days, a bare minimum of 90 days, and that assumes the entity has sufficiently funded reserve funds if they go as low as 90. So in this case, they're below that, so we would like to see those higher with any proposed rate increase that's recommended. The capital expenditure section is a section that can be used to run additional scenarios and look at the impact of any large projects that might need to be completed. So this, could be a huge water line replacement or new water tower, anything like that. You can use this section to define details of that new project and enter details of how you expect to fund or finance that project as well. If you have no new projects to take into account or look at, you can just leave that no and see what the results of any proposed rate increase are, just based off regular operating expenses and revenues. The additional margin, again, default is what was defined in the parameters of the 5%. You can also go through the steps to set the parameters some other way, either using or relying on a larger budget for capital outlay, or transfer to other funds, or funding a certain amount of depreciation. Normally the 5% is sufficient unless you have large capital improvement projects coming up that you didn't build in or budget additional funds for in your expenditures. So you could bump those up in this section. Last section before the program calculates any proposed rate increases is the revenue adjustment. So this section ties back to that revenue comparison page we went over before we entered the forecast section. So here again, we're not off by more than the 5% we like to see. It's fairly consistent. So in this case, we can stick with the calculated model error of the -139. We can move into the last section. So here we get to the actual proposed rates. So the program has now taken all the information we changed and updated in the forecast section and determined if a rate increase was necessary. So based on all the information entered here, we're showing that this entity to get to a break-even point would need a 27.85% increase and then about a 2.5% increase each year moving forward to maintain that break-even point based on what we forecasted for inflationary increases in expenditures. After that, we'll save in next, and that is completing a full version of the rate checkup. Now you could go through and pull any one of the reports currently available. So the input summary report is just a catch-all of all the data put in. The revenue comparison report is a summary of that revenue comparison page. So with any report you select, you're able to generate it either by exporting it to a PDF or to Excel. So once you click on those, the report will populate in the table below. and then you can click on view the report to view it, or same thing for Excel. You can export it to Excel and view the report that way. Income statement summaries can be broken down historical versus forecast. Same thing with customer information, water usage summaries, and then the proposed rate report can also be viewed in either PDF or Excel. And that is a complete run through.